Short Vol Show Live this morning is partially brought to you by Next Alpha, an AI investment strategy. Check out links in the description to learn more about Next Alpha. We're going to check out on the show some strategies for when vol has come in a little bit in VXX and UVXY, and more coming right now on the Short Vol Show Live.
You're watching Famous on YouTube.
Good morning and welcome on a Monday morning. Yeah, the sound was a little bit messed up on Friday. I apologize. I think my sound cranked too much. I use a preamp to run this microphone. This is a little inside baseball here, but if I pull the screen, you can see I use this. It's called a Focusrite preamp, and it's good for beginner stuff, but it's had some issues. I've had it for a couple of years, and I think it's time for me to step up to the next level in preamp type because I have more and more problems with it, unfortunately. Anyway, so I took off my position on the end of Friday, and so was thinking, whenever I don't have a position on, then I think, well, it would be great if the market went way down and volatility kind of spiked so that I could re-engage at a higher level. But that doesn't appear to have happened so far. Currently, E-minis are up 1675. They're off the highs a little bit, but not that much, and it seems to be kind of an uneventful week as we enter the week here right now, at least an uneventful marketplace as we enter the morning here. So there's we saw, oh, wow, look at that. It looks like we just had a little movement right then. That's interesting. Look at that, it's all over, it's got a huge range in the last minute or so. Let's keep watching that for a second. Anyway, so I wanted to go over a couple strategies that I like to use kind of when VXX is way off the highs and we're kind of just moving lower. If we look at VXX right now, we're kind of in that situation. And this is a strategy that I was employing about 6 months ago. And, when we talk about how to decide on a strategy and how to actually decide on any sort of trade, we look at where is our risk, how can I lose money? That's like one of the biggest focuses. And like I said, I've employed this strategy before, but let's go out to June, for example. If we look at the June puts, there's some way out of the money puts that they don't act the way you would intuitively think they would necessarily. So for example, if we look at these, and I'm talking about these just really cheap puts, you hear me talk a lot about how I don't want to give away units too cheaply, and this comes from being a market maker. Each unit represents a certain amount of risk, and it usually represents control of 100 shares of the underlying, and so you don't want to give away units too cheaply. And conversely, if somebody's willing to give you units on the cheap, then it might be a good thing to think about. And so I was looking at buying some of these cheapo puts and putting them in my pocket. Now, so let's take a look just at some specifics here. Here's the June 9 puts. They're 32-cent bid at 45. So if you were to buy 100 of these, or depending on, I don't know how much money you have to play with, but regardless of the number, for this option to double in price is not as difficult as, say, to buying a 19. What if you bought one of these, the 19 puts, and you paid $5.50 for it? It would be much harder to get this 19 put to double in price than it would be to get the 9 put to double in price, right? A. B. If you look at this option just as a by charting it on a chart and looking at your break-even points, it doesn't look like a good trade in that regard, because in this case, VXX would have to go down 50% in 200 days, which seems pretty unlikely for this option to be in the money and for you to make money on it on expiration day. However, that doesn't really describe what could happen between now and expiration. Obviously, just getting anywhere close to this strike and this option is going to go way up in value. What are the different ways that we try to judge the value of options? Well, one of them is implied volatility. So if I pull up implied volatility here, which I'm not really proposing is the best way to look at this, but just out of curiosity, if we pull up implied volatility here, we're showing a 76 vol for this option, and I'm not sure if that's based on the bid, the midpoint, or what it's based on, but obviously there's a skew here, and the skew means that the out-of-the-money puts are cheaper than the out-of-the-money calls. So if we were to go up here, this is, we said this would have to go down 50% to get to the strike. Well, if we go up 50% from where we are, so like let's call right now 18, if we add 9 to 18, we get 27. Well, the 27 strike is 106 vol. So you can see, yes, the out-of-the-money calls are skewed to have higher values than the out-of-the-money puts. So, and all that really tells us is that this put is a bargain versus this call. But if we're not going to be trading it versus any other options, that's kind of irrelevant for us, other than just knowing that that it's cheaper in relation to some other option on the board. The other thing about this option is that if we spike, if this moves up a lot, this option is probably going to maintain its value pretty well, because when we spike up higher, they raise volatility across the board, and thus this option, it's not going to decay very much over time, and it might actually go up in value if we spike. So what's the risk of buying this? The risk of buying this is either like nothing happens for a while, right? So if VXX is just going to stay in a holding pattern around 18 for like 2, 3, 4 months, then this option is going to, it's just going to melt away into dust. But if we were to buy some of these, we can do stuff against them to help finance them, right? We could let's say we buy 10 of these, we could sell one of the 12 puts against it, and that's going to basically pay for a bunch of the nines, right? So there's stuff we can do once we have these in our pocket. There's a bunch of stuff we can do against them, and if we do get like a significant move downward, like let's say vol gets, let's say, I don't know, the vaccine comes out, the transfer of power is smoother than thought, and this thing rolls down to 14 in the next month, right? This option could very easily double in value. And the last time I was employing a strategy like this, for some reason the computerized, remember a lot of the market making in an option, in all options, but especially in options and illiquid stuff, is done by computers and algorithms. And sometimes you can coax options out of the computer for good prices. I remember last time I was doing this sort of trade, I was putting a bid in 1 penny above the bid, and I was getting filled for some reason, and I was just kind of testing. Then I'd put a bid 2 pennies above and see if I get filled. And when selling cheapo options, I was able to get filled a penny off the offer a lot of times. So it's something that you just kind of got to sit there and mess around with. But certainly, if you were to be able to get into an option like this one, or let's consider even the next strike lower than the one I'm talking about, the 8 put. If you're able to get some of these 8 puts for like, I don't know, 14 cents or something, it's really not going to decay for months below that price. And you can always do something against it, right? And I was trying to figure out which month might be better here. I want to pick some option that has some chance of at least getting close. So I moved out from June to September. I was looking at like the 10 put in September. However, that's a much more meaty option, right? If you go out to Jan, you could roll down to the maybe the 6th strike or something like that. Now I know that's getting pretty far out of the money, but it's also pretty far away, right? And if you can somehow coax some of these options out of people for better than the midpoint maybe, and put them in your pocket, and you're willing to be patient, this stuff can really work out. And the reason why I say the strategy is good when we are off the highs in a VXX or something like that is because as we start to move lower, a lot of this stuff, the value of it comes in a lot. And they start to take volatility down more and more. And sometimes they don't notice just how cheap some of these out-of-the-money puts have become. And a lot of this stuff, if I switch to a screen that has open interest, a lot of this stuff has not a whole lot of open interest. Obviously, this Jan stuff has open interest. These Jan options have been around for a while. But if we go to June, some of this stuff doesn't have too much open interest. And sometimes the prices, you can, if you can coax units out of somebody, if someone's willing to sell you an option for like, less than 30 cents that has 200, 300 days till expiration, first of all, I would never sell something for like 20 cents that has like 200 days left till expiration, regardless of what it is, just because you've given control or potential control over 100 shares to somebody for nothing, right? 20 cents over 200 days is nothing. So so this is the kind of stuff that I sit and think about all day. Now, we've talked about the Bullseye Strategy before, just to refresh your memory. The Bullseye Strategy is essentially selling an at-the-money option in one of these products. So, for example, right now, 4 days to go, we might look at the 27 no of expiration. We might look at the 18.5 calls. If you were to sell one of these calls, you are taking advantage of several things in your favor. One, this is the fastest decaying option on the board. Two, the VIX term structure is in contango right now, so there's kind of a little bit of edge to the downside as it slowly decays. And three, with a trade like this, it is a naked option, so you have that unlimited risk of a naked option, but the flip side is that as opposed to a spread, you don't need to deal with several legs. You've just got one option you're dealing with, and if things don't work out by the end of the week, you can roll this out to another week. I would be very small if I was trading this kind of bullseye strategy, but it has been successful for a lot of people, and I believe it's a great way to put the odds heavily in your favor to make money in these VIX ETPs. Now, if we were to look, for example, at UVXY as far as trading these way out of the money options, it's going to be a little bit harder to get filled for one thing because the markets are generally way wider. But you can still look around. Look, these June options, remember this is a 1.5 times leverage product. The only thing I would say about this is that it seems fairly likely that this product is going to reverse split sometime in the next 6 months, and to put some position on that you're only going to have to, because if this, when and if UVXY reverse splits, it will reverse split at some point. I don't know when, but when it does, you're going to want to close, you're probably going to want to close any positions you have on and reopen them in the adjusted options, because once this splits and the new options strikes and series are put in, the liquidity is going to extremely dry up in all of these series, and it's going to be extremely difficult to get out of stuff if you don't get out of it right away. So for this reason, I would hold off on any sort of midterm to long-term strategies in UVXY. It's perfectly possible that UVXY could roll down from 12 where it is now to like 8 or 7 even in the next 2 months, and then they would announce a reverse split and you're going to need to get out of your position. So keep aware of that. Now, we did talk a little bit on Friday, and I'm assuming a lot of you did not watch Friday just because the sound was really bad. But just to refresh your memory, we are coming into a week of vacation, and that's going to be characterized by illiquidity. Also, traditionally, stuff rallies during this week, but we don't know if that will happen or not this week. But remember that this is vacation week. Not that as many people are around as before. Now, that can create an opportunity, but it also creates a risk of less liquidity than usual. Let's take a quick look at news headlines. Tesla's really been rolling upward as of late. I was watching, I don't know if you guys caught the crazy press conferences with Giuliani, but this news came out over the weekend that they are distancing themselves from this Sidney Powell lady. She, as far as I'm concerned, she gives Southerners a bad name, and she was just saying all this crazy stuff about how, all these conspiracy theories. She was talking about how Hugo Chavez was controlling the election, and I'm not sure if she was aware that Hugo Chavez passed away, I think it was 7 or 8 years ago, and they're distancing themselves from her now, and the headline is "Too Crazy Even for Trump." It continues to be a problem that Trump hasn't conceded, but I don't think this is really news to anybody because it's just kind of his personality. So we'll see what happens moving forward, I suppose, with that. And, there's a lot of news stories about people traveling over Thanksgiving. Hopefully you're not traveling over Thanksgiving because I think it's best that everybody kind of stays put. And, we see a light at the end of the tunnel as far as the vaccine right now. So we just have to get through probably another 6 months and things should be better. So I wish the best to all of you to stay safe and healthy during that period. And it appears that I will be unavailable for the Wednesday show for Thanksgiving because I have to work a side job. But hopefully I can come on in between. I have a couple of interviews scheduled for this week, so looking forward to posting that content soon. We'll see what happens. Like I said, I have no position right now coming into the week in UVXY. Let's take a look at, or VXX, let's take a look at the term structure for a sec to refresh our memory. We have nice contango. However, the distance between spot and the front month future is not very big as of this moment. I would like to see vol come in a little bit more so that we, the more we can stretch out this chart, the happier I'll be. But, healthy 6% contango here. Just it wouldn't take that much of a spike to get back through this chart again. So I would love to see us just kind of extend a little more in this chart, but it appears that we're pretty healthy here right now for the rally to continue. I obviously don't know which way we're going to go, as usual. What is the VIX, says Jay's Swiss channel. The VIX, let's see. I read it's because she's moving away to fight for the people, and she can't be attorney for Trump and the people. We'll see how this plays out. Yeah, I guess I've already said too much about politics for today. The VIX Volatility Index, otherwise known as the fear gauge. The VIX is a measure of option prices in the S&P 100 index. The S&P, or the SPX, which is the most traded product in the world. It is said that 80 cents of every dollar traded somehow, some way goes through the SPX. So. And I've currently been checking out the VXN index, which is the kind of the VIX for the NASDAQ. I have that on my watch screen. I wasn't really watching that much up until a couple months ago. Right now, VXN, or the NASDAQ VIX, 2690, whereas the SIBO, or the normal VIX, 2340. They're pretty close together right now. As you would, it seems kind of obvious that the NASDAQ, which is tech heavy, would have a little bit higher volatility than the S&P, the SPX, because the SPX has a lot more sort of quote unquote boring or blue chip type stocks than the SP, than the Nasdaq. Yeah, so personally, I just find it that it appears that all of the data shows Joe Biden ahead by 150,000 votes, and to come in and say that I don't think it's right that people should come in and say, oh, well, we're going to disregard that the public, voted for Joe Biden in Michigan, and we're just going to try to overturn that and have the people not vote for Joe Biden and vote for Trump just because we like Trump. That doesn't sound very American to me. But like I said, I don't want to get myself into more trouble. Remember when we thought the VIX was elevated due to stock prices being at all-time highs? Yeah, well, I think we're in a different period than we were in, obviously, a couple months ago when we were zipping to all-time highs and just breaking through them constantly. I think we're on a little bit firmer ground than we were back then. But, as much as we tried to describe or make sense of the market and make sense of why the VIX is in this place and point to different reasons, we never can really predict exactly what's going to happen, and we just have to kind of watch how things play out. Now, there are several people who, you can certainly make the case for why the VIX could go way lower from here, but you could also make the case for why the VIX could go higher. So there's no absolute figuring the market out. And it's something, like I've said before, that you just have to develop the ability to be comfortable with the uncertainty of things, which takes a little doing at times. All right, well, thanks for watching, and I'm looking to actually put on some of the position I was talking about with those cheapo puts, so I'll let you know how it goes moving forward. I hope to come on before Friday, seeing as I won't be here Wednesday. I'm hoping to have another show between now and then, and I will just post before the show and let you know when that's going to be. All right, thanks for watching, and have a great trading week. Be careful out there because we are in a period of vacation. Enjoy your Thanksgiving, and I'll see you soon.
You're watching Famous.